Hello everyone, welcome back to my channel. Welcome back to another post-expiry analysis. I hope you guys had a good expiry. By the end of this video, I'll share with you the positions I had and how I managed them today. It was rather volatile, but anyway, we'll just start with US futures. To begin with, US futures, as we had discussed, has finally, closed below that 32,900 zone, which was a consolidation zone between 32,900 and 33,700. And now we are at a very strong support because earlier around this time, the 10th of November, the 19th of December, the 2nd of March, and why I would like to ignore this is rather not ignore it. It's not a trap because it's been a lot of days, but I look at it as a trap because when the market bounced back up without any hindrance, it went directly up to where the resistance is, and there was a lot of strong accumulation here, and there were a lot of events happening. There were a lot of Fed minutes that were in news that time. So regardless, this is a very strong support, right? And we are now approaching that support. So one ray of hope that the US futures have to lead the global markets in a bullish rally right now is if we start reversing from 32,500 to 700 zones. From here, if we start reversing, we will definitely try to go and test the resistance again, or even before that, right? 1, 2, 3, 4. This is the fifth red candle on a daily, and after the break of the 200 DMA, there's not even been a retest. So in any case, we have to break it in a sustainable manner. Then we probably have to, bounce back from here. I believe it should look something like this. From somewhere here, we find some support and then go test the 200 DMA. And then when we break, then that would be a significant short entry, and that would be a confirmation that the markets are going to be bearish now. So until we see a closing below 32,500 to have a global bearish bias is not very fair. So let's wait for today's closing. Coming to dollar, we had discussed after this breakout of 102.7, we would be testing the 200 DMA for sure. And more than testing, we've even in fact closed above it, and we are still strongly green above it. However, there's only like there's only like 0.5% left until a very strong resistance, a firm resistance, where dollar would have to consolidate a bit even before breaking. So that little consolidation or retracement from this strong resistance that's 0.5% away is more bullish in bias and more bullish in nature. So we can accordingly just plan our trades. It's not that everything that we see on US and on dollar and Dow has to necessarily reflect in Nifty and Banknifty, but we can get a longer bullish picture, right? So now jumping back to our markets, we should begin with Nifty. Let's begin with the daily, right? So Nifty basically has been hovering between this 18,050 to 18,400 channel. It's a very strong consolidation, but between a rather big channel, right? That's around 2%. It's a 2% range where the markets have been trading. And this was an intermediate support below which the market has just closed once, and then we had jumped back in. So this was a strong support. Around 18,200, and we have retested that. And when you look at this in hindsight, right, whenever the markets will go up now, so at times why indicators can be lagging in nature is because probably 2 to 3 days from now, if we continue a bullish rally, you will see this 21 DMA aligning with the bottom of this candle, right? So basically we are bouncing from somewhere there, and 21 DMA is a very strong indicator to decide a short-term trend. So there's a lot of multiple confirmations, right? Going all the way to 18,200 and closing at 320. That's very strong, very good recovery. So my next immediate daily target to initiate any fresh shorts would be a daily closing above 18,440. It's possible that if global markets help us today, we would probably go closing above 18,440 tomorrow. And in that case, we could have BTST long trades over the weekend, right? So anyway, we'll discuss that too. Now coming to an hourly time frame. Yeah, the reason I've kept this channel until now is because I had thought of discussing this as how you can probably analyze technically when you're looking at markets. So after the breakdown of this hourly channel, we exactly fell from wherever the markets retested the channel, and we had discussed this, right? So this was a nice, good short entry, but now we don't need this channel anymore. So and I always keep telling you this in all my videos that keep your charts as clean as possible. So let's begin with the lesser probable trades that could happen. The short side, I am not very bearish in nature right now. I am bullish. I'm even holding longs, and I'll discuss the position I'm holding. So where was I? Yeah. So if we basically on an hourly now, the only short trades possible will be below 18,200. A strong gap down and a closing, early closing below 18,200 is when we can short the market for 18,050 and below probably. But our first target in that case would be 150 points away, so that would be a good short. But that's only if we strongly negatively gap down and give an early closing below 18,200. In any case, we open flat anywhere above 18, around 18,280, 18,290, a slightly bit gap down also, and then we on an early start to take out the highs of this. That's 18,337, 18,340. Then we are gonna build our fresh longs, or if you're already long, you could add more to them. And we can book our first target on 18,412. This is hourly time frame, followed by 18,450, and finally followed by 18,520. I'm personally expecting a bullish rally. Now, one strong chart pattern that I see here that I want to discuss with you guys is, if you look at this, right, this is a proper pole, and this is the flag, and here we've broken out with one of the strongest hourly candles you can see on the entire chart right now, right? This was 87 point candle in an hour. That's really strong. So with that being said, if this is the breakout of the flag pattern, the bullish flag pattern, then around somewhere here, around it shows us that possible targets could be 18,527. So if you are long, you could sit tight in them, but you could trail them, and below 18,200 on a positional basis, we are out of all longs, and then we should consider shorts. And similarly, on a 15-minute breakdown, any flat, okay, the non-trading zone is going to be 18,315. I mean, if you see rejection here, or the short rate, only short rate that could happen is below 18,275, 15-minute closing for 18,200, below which the targets would be big. But any flat opening, slight gap up opening, or opening at a 15-minute candle above 18,335, we are going to start booking our first profits around 18,387, 18,405, 18,451, and then 18,527. So these are the trades in Nifty. Now coming to Bank Nifty, on a daily, Bank Nifty has a cleaner pattern. However, on smaller time frames, that idea is rigged. Yeah, so basically you see a very strong bullish hammer from a very strong rejection zone, right, which was the previous resistance. Every time we fell from here, we fell like 5-8% from this from these highs. So this 43,400 to 43,500 zone, this was really strong, and it also aligned. So this is a point of confluence on a daily with a 21 DMA. So a strong bounce, a strong buy from 43,350 lows to 43,680. That's really strong. But in the bigger picture, like if you consider medium term strength and direction of market, it is sideways. There's really no trend, because where we were on the 12th of May, it's the end of May. May has expired now, and we are still at the same place. So the only long positional trades now that we could hold on to over the weekend is, if at all we see a closing above 44,150, around 44,200 levels. If we see a strong bullish candle tomorrow in Bank Nifty, we are going to hold BTST long trades for really potentially far away targets like 44,800, 43,000. So that could be a great long entry on a daily. And when you break it down to a smaller time frame, if you come to 15 minutes, yeah, so now if you can see clearly, this was a very, very strong support zone, because every time the price has bounced from here, it's gone retested all-time highs. So this is broadly a bigger channel between 43,400 to 44,200. That's like around 800 points. And now from the bottom, we've started our journey upwards. So any opening, right, flat opening below 43,745, we have to wait for a 15-minute closing above 43,745, or an opening and a candle sustaining above it, because that's a 200 EMA on a 15. And in that case, if that happens, we are going to build fresh longs for the target of 44,070 to 100 zones, above which we are fresh long again for really potentially big targets. However, in case of a gap down opening or a negative opening, slightly negative biased opening, if at all we start coming below 43,500 again, the risk reward will not be very favorable, because it's just 150 points away for a bigger risk. So for a confirmed short entry, we are going to enter only below 43,350, and then we can hold on to our trades for bigger targets like 43,000, the psychological, and then 42,850. So that's the trade plan in Nifty. About my trades, this is something what my day looked like. Yeah, my day looked like this today, and the only thing that I wanted to share with you guys, oh yeah, this is the long position that I'm holding for tomorrow. It's at the money, but yeah, it's the 1st June expiry. However, what I wanted to teach you from this pyramiding is the way I've broken my trades down into the 1st June expiry and today's expiry. And if you notice, right, the bigger numbers that we've made or lost, they are mostly from the current expiry. That's because That is what an option buyer does on an expiry, play with the volatility. And I usually scalp, and that's why my risk reward you see is around 1:1 or 1:2 in some cases, but mostly 1:1 because I scalp on expiries. The trades that were held for longer durations, right? They are the ones that I wanted to give some space for a stop loss. So you have to consider all that, and that's how you position your trades. And you can also hybrid them between current expiry and the next expiry, and get out of one where you are not able to give more space for a stop loss. So anyway, that's it for now. I hope this analysis helps you. Kindly do like, share, and subscribe, and especially share it with your friends who are trading. I hope these logic and levels about the analysis helps them out to place better trades and understand risk. And kindly follow me on Instagram too, where I keep updating my daily PNL. And that's it for now. I wish you guys all the best for tomorrow, and I'll see you guys tomorrow.